The merger between AT&T and Time Warner has been approved, as was expected here, but it took a little while. Judge Richard Leon has gone ahead and approved what would be the biggest media merger of our time here. But again, it's always in the details. Charlie Gasparino following it all. Charlie, what can you tell us?
We have to see those details, those conditions. Let's look at it this way. If the conditions are mild, okay, this is a huge win for AT&T. It's a huge win for Randall Stephenson, who's been left at the altar in the past. His job is secure. And let me tell you something. Tomorrow starts the bidding war for 21st Century Fox assets. Comcast is likely could put it in as early as tomorrow. Listen, if it's a clean approval, and we have to see exactly how clean it is, you know, they may even put their bid in tonight for our entertainment assets that are slated to be sold to Disney. From what I hear from bankers, there could be others involved. But the devil is in the details of those conditions, if there are conditions. And I'll tell you, those conditions, Neil, could make an approved deal be in reality an unapproved deal, a bad deal. And what do I mean by that? If they make it, if the Judge Leon applies enough conditions to make this very onerous on AT&T to leverage the Time Warner assets so they can't really make a lot of money out of it, well, that's not good for this deal, and you'll see this in the stock price. If this deal does get approved, you know, listen, for the average person out there, if you own stocks in these companies, yes, they go up, but for the average person, it's going to change the way you consume news and entertainment. There will be two major companies out there, Comcast and AT&T, controlling much, I would say most of the content out there that you get on cable. I mean, it's going to be pretty amazing. And do they have the ability to jack up prices, because these two companies have very large near monopolies, as the government was trying to argue. Judge Leon did not buy that argument, I should point out. He said essentially this: technology is, I mean, we have to read the decision, but if he approves, he's basically saying this. Technology is such that they don't have the pricing power that they used to. You have other options out there. But I'll tell you, Neil, we got to see the conditions of this thing. If there are no conditions, man, tomorrow's going to be a wild day for deal making, because I think it starts.
Just tuning in, a judge has gone ahead and approved the merger of AT&T and Time Warner, including all its key media properties, including the Turner Network, is CNN, by the way, which was the genesis for some of the concerns within the Trump administration that this didn't make much sense to them. Now, we were talking as well, and Charlie was mentioning, I'd be bold to mention it as well, that other media stocks, including Comcast and Fox Entertainment, our parent company, have been seen to be in play here, given the heightened interest in merger deals that might pass better muster now that this has gone through. Right. Now, it's way too early to tell that, but they're all in play, and all after trading, they're all moving pretty smartly in after-hours trading. What are you to make of that, and who and what could be next?
I would say tomorrow is the beginning for the bidding war for 21st Century Fox's entertainment assets that are slated to go to Disney. I mean, Comcast, we were first to report at the Milken Conference on your Fox Business Show. I was first to report that said Brian Roberts, the CEO of Comcast, was waiting for this decision. If it's a positive decision, if AT&T is allowed to go through with the merger, he had enough confidence that he could add to his massive media empire by going after our assets, and he would try to outbid Disney which he essentially is he's planning to do with an all-stock bid that's above what Disney is looking to pay for our assets. Now the question is, does Disney come back? Does another bidder emerge? Bankers are telling me there's a lot of interest in our assets. There's not a ton of content out there, and a lot of companies, including tech companies, are looking to get into that space. A lot of people thought Apple might actually bid on our assets. Our sources inside Apple told Fox Business that they are not interested, but that doesn't preclude Amazon or Netflix or somebody else. So there's a lot. This is good. If this deal is clean, or if it's near clean, and that's where we have to get into the details. And I'll tell you, I talked to some of the people at Comcast today. They said, okay, we want to read this to figure out exactly how to proceed, in the sense that if there are a lot of conditions, they want to, unless it was an outright rejection, they were almost certain they were going to bid, and they were going to essentially formulate their bid on the type of
Charlie, I don't mean to interrupt you. There do not
conditions.
appear to be conditions to this. And it's still too early, I grant you, but I'm showing you now how these stocks are trading in after hours. Walt Disney, of course, given the fact that it wants to purchase these Fox Entertainment assets, of course, that would be down predictably on the notion they're going to have to cough up more dough. Comcast, presumably for the same reason, if it wants to compete with Disney to buy Fox Entertainment assets.
So Judge Richard Leon, kind of an old school guy, hardline judge, he ruled against the DOJ because he said they did not meet the burden of proof, which was their responsibility in this case. He just didn't buy what they had to say. He didn't think they brought enough reasons to the table of why this would be an antitrust violation. So he's ruling in favor of the AT&T Time Warner merger, giving them the go-ahead for AT&T to buy Time Warner here. But the interesting thing is he had the option to put conditions on this. So the fact that the judge said green light all the way, go ahead, no conditions, shows just how much he bought AT&T and Time Warner's case and rejected the DOJ's case. But there is a wild card here. The DOJ, people who've been following this trial very, very closely, have said that they would not be surprised if the DOJ tried to appeal this decision. This merger is not set to take into effect until later this month in June. So they do have some time. But the judge preempting that today inside the court, basically saying it's not a good idea for the government to bring this issue up again because he just doesn't think that there is enough there. So we'll see if the DOJ does try to pull a fast move here and try to appeal this decision. But for now, AT&T and Time Warner have the green light, and you're seeing this ripple effect really across other potential media deals that are kind of waiting in the wings. You have Comcast stock up in response to this. You have AT&T Time Warner stock up in response to this as well. So positive effects rippling across the board to future deals that could be waiting on the wings of this. But the judge really telling the DOJ to sit down and to not bring this issue back up again because he doesn't think they have enough for an appeal. So as far as he's concerned, this decision should stand.
And as I mentioned earlier, ever since that AT&T deal to finally land, it had been almost a 2-year hunt, Time Warner. We knew it was just a matter of time. In fact, you could just look at a stopwatch before others would jump in the pool and see what deals were out there to be had. Now, Disney had already had a $52 billion deal to buy a good many of 21st Century Fox's assets. That, of course, is the parent company of this network. It would not include any of our cable news or business channels, but it would include a lot of other big pieces from movies and a lot of big offerings abroad. And that was an allure certainly to Disney prior to all of this. And now Comcast has joined the fray with an offer that's significantly higher than that, $65 billion. Here's the difference, too, with that. It is all cash. Charlie Gasparino on that. What do you make of this, Charlie?
Well, we got a good, big old-fashioned bidding war here, Neil. As we were first to report on Fox Business, about 3:45, we got the word that Comcast was going to make its offer, or likely to make its offer, for the Fox Entertainment assets. That's essentially everything but us and a few other stations, movie studios, other channels. Make that bid after the bell, literally 3 minutes after the bell. We reported at 3:45, but 3 minutes after the bell, that official bid came in. It's above $60 billion. It's all cash. It, at least on paper, and you know, it's above what is on the table with Disney, which is a $52.5 billion stock offering. Now the question is, do the Murdochs, the controlling Murdoch family, have to take this serious? Do they want to do the deal with Disney so badly that they ignore this? I will tell you this: what we've been reporting in the past is that they have to take this deal seriously. They will take it seriously. They will act in the best interest of shareholders. The one fly in the ointment of Comcast's past attempts to try to buy our assets was the Justice Department and regulatory, and the fact that the Justice Department hates these companies like Comcast that mix big distribution of cable TV content with the said content. That's why they went after AT&T. But guess what happened? On the AT&T deal, Judge Leon has allowed it to go without conditions. So he gave his blessing to this. Now, one fly in that ointment. So you would think that Comcast would approve, has a green light here, and that we almost have to accept it, meaning 21st Century Fox. We work for that company. That's why I said we. Right. Not so fast. As I've been reporting all day, DOJ may indeed appeal the latest ruling, and that could throw all this into another. I mean, this is a huge chess game where there's some degree of uncertainty, but it is but
Charlie, I'm
amid this
jumping on you
uncertainty.
here. The Fox shares are up after hours trading, after running up about 7% today, up an additional 1.25% here.
Yep.
Comcast was dipping a little bit after hours here, but not as much as you would think. Obviously, the view seems to be that they are going to continue this back and forth because there's such a differential between an all-stock offer here at $52 billion and an all-cash offer at $65 billion that it almost begs for a return salvo here. Could any other players enter the fray?
It's a great question, and we've been reporting that bankers are saying there's other players that are interested. We've heard Silicon Valley players. One name that you could probably take off the list was Apple. We've gotten direction from Apple, from the company, that it's not interested in our assets. But that leaves Netflix, that leaves Amazon, that leaves a lot of other players that may want to jump in and buy our assets. There's not a lot of media content that's really good out there. We have really good stuff. Time Warner obviously has good stuff. It's trying to merge with AT&T. CBS is considered good stuff, but there's not a ton of it. And so there is a scarcity value for these things, and there is a need for content to expand, particularly as traditional cable looks to compete against the new entrants, the technology companies. They believe that by merging with content, they're better able to compete. We'll see.
All right.
There is some regulatory concern on this, even with this deal going through. I will say this, though. If you watch Fox Business and you traded off my report early at 3:45, you made a few bucks.
Not that people would be so selfishly.
Well, that's what
right.
They should be.
No,
that's
kidding,
what I'm here
kidding.
for.
Thank you, but you
as long
serve
as I don't
America
trade.
well. No,
as long as I don't trade on it, there's no problem here.
Yeah, sure. Okay. love is money. All right. Thank you very, very much. And just to follow up on what Charlie was saying here, some of the other affected stocks, I apologize for us not showing you these. We don't have them readily available. But Disney finished up about 2% today. After hours, it's down 0.5%. Comcast, which was not moving much, despite all of this, is down 0.5% as we speak. But of course, all the lady at the dance is getting all the attention right now, and that is 21st Century Fox is up even more after hours here as this run up at attention continues. And across the media spectrum, as other players come to the fore, presumably with fat wallets and opportunities either on the buying or the buy side of things. We'll keep you posted on this big development for how you get and what you watch on TV and elsewhere, streamlining or otherwise.